This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices were steady on Monday as investors assessed a potential end to the U.S. government shutdown and concerns around oversupply in the crude market. Brent crude futures rose 11 cents, or 0.17%, to $63.74 a barrel by 10:51 GMT. U.S. West Texas Intermediate crude was at $59.88 a barrel, up 13 cents, or 0.22%. The U.S. Senate on Sunday moved forward on a measure aimed at reopening the federal government and ending a now 40-day shutdown that has sidelined federal workers, delayed food aid and snarled air travel.
Hungary said on Saturday it had obtained an indefinite waiver from U.S. sanctions to use Russian oil and gas, but a White House official reaffirmed that the exemption was for 1 year only. Last month, U.S. President Donald Trump imposed Ukraine-related sanctions on Russian oil companies Lukoil and Rosneft that carried a threat of further sanctions against entities that buy oil from those firms. Hungarian Prime Minister Viktor Orbán, a longtime Trump ally, met with Trump at the White House on Friday to press for a reprieve. Hungary relies heavily on Russian energy and Orbán, 15 years in power, faces a close election next year.
Moving on to the top news in the energy sector.
The volume of oil stored on board ships in Asian waters doubled in recent weeks after tightening Western sanctions hit exports to China and India and as a shortage of import quota curbed demand from independent Chinese refiners, analysts said. The European Union, United Kingdom and the United States have imposed a raft of sanctions against Russia over its war in Ukraine, with the latest U.S. embargo targeting Russia's two top oil producers Rosneft and Lukoil last month. Some refiners in China and India have switched to buying oil from the Middle East and elsewhere, providing support to global oil markets despite rising output.
U.S. President Donald Trump has been talking up the prospects of Saudi Arabia agreeing to normalize ties with Israel, but it is unlikely to happen when Saudi Crown Prince Mohammed bin Salman visits the White House this month. The establishment of diplomatic relations between Israel and Saudi Arabia after decades of enmity could shake up the political and security landscape in the Middle East, potentially strengthening U.S. influence in the region. Trump said last month he hoped Saudi Arabia would, very soon, join other Muslim countries that signed the 2020 Abraham Accords normalizing ties with Israel. Next, we have the top news in metal markets. Premiums for consumers buying aluminium on the physical market in the U.S. have hit record highs, driven by steep import tariffs and tight supplies globally. President Donald Trump doubled tariffs on aluminium imports to 50% on June 4 with the aim of supporting investment in U.S. production of the metal, which is used in construction as well as power and packaging. Buyers on the U.S. physical market typically pay the benchmark price on the London Metal Exchange plus a premium that covers costs such as freight and taxes.
China has suspended a ban on exports of gallium, germanium and antimony to the U.S., its Commerce Ministry said on Sunday, although the three metals remain subject to broader export controls requiring shippers to first get licenses from Beijing. China restricted exports of the three metals between August 2023 and September 2024 before singling out the U.S. for an outright ban last December in response to new curbs imposed on its chip sector by Washington. The ban caused shortages among U.S. users and some importers resorted to workarounds like routing shipments through third countries to get their hands on materials used in products including semiconductors, fiber optic cables, ammunition and flame retardants.
We will now look at the top news in the agricultural sector.
Russian wheat export prices rose slightly last week, and weekly shipments are maintaining their pace, according to analysts. The price for Russian wheat with 12.5% protein content for free onboard delivery in mid-December was at $232 a metric ton at the end of last week, up $1.50 in a week, said Dmitry Rilko, head of the IKAR consultancy. He called it a small seasonal increase, partially related to compensation for storage costs. There should be no illusions here. By and large, nothing has changed, Rilko said. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.